my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. 13 weeks ago I lodged the idea of there being a large bump and run reversal pattern stretching from July last year until May this year, in both your own and my mind. This was a transformation from an earlier descending scallop pattern formed over the same period. I asked you to bear this in mind just in case for future use, as it was a pretty large pattern. However, this large pattern has since morphed again back into a descending scallop pattern, especially in recent days. Looking closer at more recent action, in the middle of May prices started the process to break down and out of the early February to late March bullish Andrews picture, which had until then guided prices higher. On the way lower, the market made a mid-June to mid-July bearish halfway hesitation, moving lower but not really fulfilling its potential on the downside, as the market reached down to the very significant lows of late November 2023 plus January and February this year in the 15,840 zone. These cracked the downtrend that had been riding the market lower. In many ways this was not a surprise, not at all. It is at this point that I feel obliged to mention once again the big descending scallop pattern and what it may mean within the near-term universe. So the key level, as I've already mentioned, are the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below that level would give a potential for the descending scallop pattern on the downside down in the 13,830 zone, which is not too far from the potential below for the bearish halfway hesitation. Thus it all came down to what the market would do once prices reached 15,840. Well, the market chose to bounce back upwards, and over the start of August sustained the bounce, moving higher last week and even today. Last week I put forward the idea that the action over late July to August might be a possible mini cup with handle pattern. Well, this pattern, apart from being short in time, is higher on the near side, yet despite all that it looks like it is working, as prices are nearing the potentials laid out last week of a primary target X in the 17,200 area and a secondary hard to reach target X1 up in the 17,470 area. Today prices broke free on the upside over the declining green short medium moving average, currently at 16,760, and the July 2021 low at 17,095. However, we then have the stiffer slowly declining gold long moving average, currently at 17,335. Beyond these we have the October 2019 high at 17,815 and the June 2021 high at 18,610. These are in a fairly free areas overhead. My only concern is that the ammunition we've accumulated during July and August may not be enough to tackle all these resistances on the upside, but we shall see. LME 3-month zinc. This market peaked this year at the neckline of the September to December 2022 reverse head and shoulders pattern, the horn top in late May. Prices moved back down, rejected by this neckline, reaching the primary and secondary targets for the horn top. But the decline became hesitant in mid-June, especially when it tested the interesting support, currently at 28.16, of the dark blue broken upper tine of the old May to August 2023 bullish shift pitch fork that had acted back then as an August 23 to April 24 upper bull channel line. Now please remember this broken upper tine and the pitch fork as it will become relevant again. Anyway, I said 11 weeks ago, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle tine, currently at 26.51. That's the end of the quote. Excuse me. Eventually prices did drop down just below the middle tine in early August, but this drop was not singular, rather it was part of a late July to date small reverse head and shoulders pattern, a highlighted purple neckline on my daily chart, currently at 28.37. This week we have seen prices drive higher, not only over this purple neckline, but also over the June 21 low at 28.10, the old dark blue upper tine, the green short medium moving average, currently 28.15, the mauve medium moving average, currently 28.57, and the bright red upper tine, currently 2840, of the late May to early July bearish shift pitchfork, which I only drew 2 weeks ago. This also counters some quite strongly July's monthly key reversal down, and may even set up yet, though we have so few days left, it may set up for August to be an immediate countering key reversal up. We shall have to wait and see how this all plays out. But in the meantime, I can lay out some potentials for the reverse head and shoulders pattern. Thus, a primary target X would be in the 3009 area, with a secondary harder to reach target X1 in the 3087 area. What we have in the way is specifically a congestion band, not too far above, between 2958 to 2965, containing the April 2019 high at 2959 and the 50% Fibonacci line, the big old 2008 to 2022 move at 2965, plus just over the 3000 level, the July high at 3022. There doesn't seem to be much else apart from these right now on the top side, so keep a close eye. LME 3-month 10. Over April and May, we saw the market form a double top, Adam and Eve type, leading eventually to the creation of an April to July triple top. It also clarified the April to July sideways triangle, which had a first false break on the top side, but then a proper break lower late 6 weeks ago. The market followed on lower with a move down to the primary target, but not the secondary hardest reach target. Likewise for the triple top, prices reached down to the primary target, but not the secondary hardest achieved target. On the way down, we saw congestion between 28835 to 29005, containing a July 2011 high at 29005, plus the slowly rising long moving average, currently 29080, and the nearby neckline extension of the October 2023 to January 2024 reverse head and shoulders bar, which is currently at 27880. And finally, the 50% Fibonacci line of the March 2023 to April 24 move at 27330. All these slowed, stopped, and at the start of August turned the market higher. In hindsight, I suppose you could also throw in the dark blue middle time, currently at 27230 of the April to July bearish Andrews pitchfork as well, but I'd personally stick to the gold long moving average and the congestion zone. Since that push back up in late July, almost looking like a double bottom, prices have risen, gotten stuck in what I can best describe as an accidental congestion area overhead, created by the mauve medium moving average, currently at 3250, and the green short medium moving average, currently 31960. The 50% Fibonacci line also of the March 2020 to March 22 move at 31845, and the neckline of the thin and tall April based head and shoulders pattern. Yes, that one, the one I mentioned a lot back then, currently at 31750. This accidental area is actually the gateway to a whole load of congestion overhead, dating from early April until mid-July. And until 2 weeks ago, I had doubts about whether the market had the ammunition or even the inclination to take things higher. Higher we have moved. This week breaking up over all those previously mentioned resistances, turning them into supports, and notably over the dark blue upper time, currently at 32310. Now beyond, well, all as I said last week, and I quote, we have little in the way until the previous all-time high in April 2011 at 33610, and the 50% Fibonacci line, the March to October 2022 move at 34175. The latter being a significant level. And that's the end of the quote. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.